Okay, hi there, guys. G'day, Gino. Just slowly getting myself organised as usual. Am I coming through loud and clear? Sound check, sound check. Testing one, two. Excuse me. I'm assuming I am. So, well, let's just rip into it. Alrighty, welcome to Trade Setup and the live stream. G'day, Murray. The live stream. What are we now? The 22nd of October. So getting ever so slightly closer to Christmas. Kids are ready and raring. The little fella's only gone back to school after a break, and he's already looking forward to Christmas. So should be a good time. Been some nice sunny weather over the weekend. Anyone that's new, welcome. Welcome for the, if you're listening to it later on, welcome along the Trade Setup. Just remember, if you do have any questions after you've listened to the stream and there's something that's just eaten away, feel free to send an email. You can just send it across to support@tradesetup.com.au and we'll get back to you. If you do in the stream, just make sure that to actually get involved in the chat, you'll need to log into your Google account and then go to the stream link. And what you'll do is you'll see the chat function on the side. Otherwise, if you're not logged into a Google account, you won't be able to talk through YouTube. It'll just be viewing the actual stream. So you can't give me any abuse, which is good. Anyway, so if you are new, just remember at the top left-hand corner, link into us at Twitter, which is at trade_setup. Then right-hand side is Facebook link there, and the bottom right is subscribe to us at our YouTube channel, which is at TradeSetup_AU. Now, what we're looking at, and it was someone else's idea in the chat. One of the guys put up an idea is to have a bit of a meetup. Well, we've got a big meetup group, so we want to do a bit of a talk towards somewhere towards the end of the year, and potentially have a couple of drinks in the city in Melbourne. I know there's a few interstaters that would like to come across, so I'm just debating on what would be better to do, like a stream at a place in the city, and you can come along and ask some questions as well as being live, or whether it's better just doing a live talk in Melbourne, and down the track we can do one in Sydney and potentially Queensland as well. So let us know. Just shoot across any input or any feedback if you'd be interested in joining us at that event, and whether or not we'll get up and running and get that organised. So I'm going to look into it this afternoon. Yeah, so just send us an email or send us a message, and yeah, enough people interested, then yeah, we'll definitely get involved and we'll get that up and running. Let me minimize that. Let me adjust my screen. All right. So we've got the markets down 27 at the moment, so they've actually bounced back a little bit. Let's just look at that intraday action just to see if that's trying to find some support, whether or not it is. So that is your 5 minute, and the same sort of thing. If you saw on the ASX, it opened down on Friday. Obviously, the US is down quite a bit. We got slammed on the open, and it pretty much bounced all the way back again to finish down about 2 points, which is quite good considering it was down somewhere in the order of about 50 points or so, I think, at one stage earlier on the session on Friday. I'm not saying we're doing a similar thing, but it looks like we're starting to grind higher. We didn't quite get as low, so we didn't push all the way back down to the lows from Friday, and we're starting to find some buying support again, step in. You can see the high lows building. So that's a good sign intraday. It's whether or not we just hold up here. But it looks like it's that, whether we are holding up that 58 level, if we go back to the daily, that 58 is going to hold up, or whether it's just getting some buying support in here and then it's going to topple over and squeeze them all back out. We don't know just yet. I mean, it's very early stages from what we discussed on Thursday last week. Just talking about the markets overall, and so those weekly time frames, which you can see the market's been up. It's broken down out of that weekly uptrend. It's whether it's going to hold up around 58 and whether you expect it's just to blast through from here, which I find it to be a bit of a tall order to just go straight from 59 straight through 58 at the moment and start taking out these lows at what was low, low of around 57.24 or 25. I would expect some sort of buying support just to edge that higher and then potentially if we do get quite a deep reaction higher, then we get that lower high build, whether it's going to be like we were at the start of the year. At the start of the year, we sold off quite heavily, bounced straight back. It's probably better on the daily. I'm not going to see it on the daily, am I? Let me just adjust that. So that was the action here. We sold off, we rallied up, and then boom, start of February, when that was the same thing. When US bonds rallied, they sort of out of the blue, the yields rallied. So the interest rate that you've got to pay basically for the bonds rallied, put pressure on the market, and the market just got sold off hard in the US. I think it was a Friday night after payrolls maybe, and we've come in, just gone boom, straight down, followed them down, and then we've reacted quite heavily back up again. Not far off those highs. Most markets did. The S&P did the same sort of thing, reacted quite hard, then it's come back down. We've actually taken out our lows, then started to find some buying support in, whereas the US actually just retested and they started bouncing. So I'd suggest there's quite a bit of time. If that's going to play out, we could just be this slow grind higher and get a similar price action. Well, not a slow grind, but a good healthy grind higher would be good. What you don't want to see is that sort of stair stepping like we've spoken about in the past. I'll just show you what I'm talking about for anyone that's new. We don't want to see, come on, we'd rather see, the market's topple over here, maybe a bit of chop around here, and then some decent moves back up to where it come from, rather than markets pressed down and starting to see these controlled action that's not really taking out the highs very far, a deeper correction again. That's not really conducive of a very strong market, and that would lead me to believe, we can draw that straight, that we're probably going to break and start getting your lower highs coming into play and then edging the market down again. And that's where this scenario, I probably would expect it to take out this low at 58. Hope that makes sense, guys. But it's just, I still think there's quite a bit of time that we've got to, it's got to go through a process. There's probably a few people have been hurt with this rundown, and then there's going to be some bargain hunters stepping in. It's just how many and how, where they're going to start stepping in. Potentially, it might have to drop off a bit more around 58, and then, or 58.50, so 58.75, and start to step in, or they could be stepping in here, grind it back up again, and just sort of how far we get and what sort of price action we get on the daily charts to assess what could happen on the weekly, whether the weekly is going to be that lower high, we pop up 6,000, then bang, straight down, and that I would expect to take out 58, 57.25 we said, and take out this low and potentially be a deeper correction. And that's where that's going to put a bit of pressure, I think, on longer term charts or longer term price action. The US, we know, is they've got a few little headwinds into the market now. Let's just get up. What am I trying to get? Market indices. There we go. So the US on Friday night, as you'd all probably know by now, it was fairly choppy. I think, what do we have? The Dow was up, the S&P flat, and the Nasdaq down. Now the Nasdaq have got three biggies earnings reports coming out this week: is Amazon, Alphabet, or Google, and Microsoft. So I think the market's sort of just prepping to see what's going to happen there, what their earnings are going to be like, as to whether they're still going strong or they're starting to slow down, or there's going to be slowdown in that sector, which has really driven the overall market higher in the US, or if it's worth buying again, because don't forget the market's getting a bit tentative. Whether or not where they are at the moment, I think a lot of traders are trying to assess, okay, is this continuation? We've had a good healthy correction. We cleaned out a few of those late buys that have pushed in here. Get back to the daily. So these buys that are bought up here, we've cleaned them out. It's just putting some traders back on the sidelines. So whether or not we're going to hold up above 25,000, around about that where we are at the moment, 25,250 to 25,500, whether the market's going to hold up here and whether it's worth buying again. And I think there'll be a lot of traders out there assessing that, whether this is going to be a continuation. We saw it at the start of the year. Bond yields caused a bit of havoc. Bond yields are now calmed down a bit. They're backed off from their peak, but they're still above that 3% mark, which was sort of the key. They're holding up above there at the moment. US dollars, I guess everyone's sort of earmarked that to keep grinding higher, even though it was down on Friday. So longer term, I think it's got to head higher. It's just whether or not, and people keep assessing that if they're going to jump into the US dollar, whether or not there's going to be those interest rate rises, which they've earmarked, I think, a couple next year, another one by the end of this year, another about 3 or so next year. If nothing changes from the Fed, that US dollar will probably go higher, obviously stair step its way up. and you probably find that bond yields might go with it, which might put pressure on the equity market. But if you start to get data like jobs, labor market over in the US is the big thing, which could be dragging back the market. If that starts easing off, maybe there's a case to say there's not going to be that extra rate rise. They're going to back off and just hold off on one of them, which would mean you might find the equity market start finding some buying support, especially around about where they are. So there's all these factors going on. Traders are trying to assess, is this enough of a correction, or are we in for a much deeper correction back from your weekly? Is this essentially a double top and we're going to go back up and make a lower high and then drop off after this big bull run for a few years now? Or is this just another buying opportunity about where we are at the moment on the ASX? Depending on obviously what the earnings are coming out, a few other factors. There's still problems with China. Not problems as such, but that's still going to be worked out, the tariffs. We've got emerging markets. So you got, which is funny, I think Italy and their budget plans, the EU didn't quite like it, and it could be the first time they asked for a revised budget plan. So I think they're just trying to go using debt, to expand the budget deficit to get that. It would stimulate the economy, and I don't think the EU is quite happy with it. But we'll see how that plays out. I think that's earmarked for Tuesday or just after Tuesday, whether or not they ask them to submit another budget, which would be an unprecedented step. So there's a fair few. I mean, when you add them all up, there's a fair few headwinds out there, but it doesn't mean the market can't keep heading higher because don't forget, in saying all that, and that's everyone knows that. Everyone knows what's going on. We do know there's a lot of headwinds, but that could all be fuel to get squeezed out. People will continually short the market. They'll try to pick the top, and it happens all the time. It's like picking the bottoms. If you're trying to pick the bottom, it could bounce. You go, okay, you got a few days up your sleeve, and then you turn around and get squeezed out. So you try again, try to pick the bottom. It's a lot of so different on equities, but when you're talking indices and futures markets and currencies, it's just a tough go. And they know that people will be trying to pick the bottoms, all the time, and they'll continually get cleaned out. The market might bounce, drag in, they get hopeful again if you're going long, and then they turn around and drops like a stone, squeezes them back out. And it happens the same on the upside. When the market's rallying, you have these pullbacks. You could get people just trying to pick the bottom, or sorry, we're talking about picking the tops on that side, picking the top because they know that these headwinds are in place. There's a lot of, and they're saying, okay, this is not going to, the bears will continually talk it up. The news flow is still there. It's always going to be negative, whether it's a rally, it's always going to be negative. And if it's dropping out of the sky, it'll keep talking it up. So it's just that negative news flow that's coming out. It's bringing in the bears, bringing in sellers, trying to pick the top. And potentially it could just be enough fuel just to continue squeezing back out in this market to continue rally. Some of the best rallies happen when it's the most negative type of environment. So I guess in saying all that, just be careful either side of the market. Don't try to pick a top. Let the market tell you what's happening, and then and the same with any of the stocks you're trying to get into or you're looking at. Just let the market, let those stocks, or let those setups play out. I've obviously had the reasoning for it, and then if it does play out, honor it, and jump in. Know exactly where your risk is, and just see if you can follow the market higher. There's still a lot of shares that are going to do all right, even when the market's a bit tentative at the moment. So we'll see. So that's probably, we don't really need to talk. That's the S&P, the Dow. Also, the Dow, the S&P is very similar. Where's the S&P? Here we go. Similar price, it's rallied up, got a bit ahead of itself, bit of heat coming out of the market. Basically, a reversion to the mean, because it's on a bigger scale on the weekly. It's created a bit of havoc, bit of news out there that's really got people scared. But then it turned around and retested lows. Up she went again. And that whole time, there's all these headwinds. You can see we're talking about this, that, and the other. Why the market should roll over? Are we overextended? Are we this? Are we that? And we're straight into new all-time highs in the S&P. DAX, not quite as nice looking, that chart. I think the weekly, if we flick it back to the monthly, it's still in a longer term uptrend. It's just this monthly we've been rolling over a good part of this year, holding lower highs. We're at, we took out those lows we were talking about at just below 12,000, about 11.8, 11.9. Took them out. We finished below them last week. So this looks like it's going to hold another lower high in the daily and press down through the 11.5. But we'll see how that goes. FTSE, probably similar. They've still got their Brexit issues. I think in Europe, reporting season's not quite as strong as what they thought it could be, which is sort of, anyone that just did nibble at the markets probably jump back out again because it's not quite as strong. And then you've got US getting a bit mixed as well. There's a few issues obviously in Europe. Europe have got emerging markets, potentially the EU. FTSE, what did Britain come out and say? I don't know if it's Friday night. They so they actually finished up on the FTSE, whereas the DAX was lower, and I think the Euro stocks, which is the broader market in Europe, was pretty much, give or take, it was pretty much break even, I think. Um, Brexit, I think Britain's willing to, give up on one of their important points that they were always trying to hammer out, give a bit more leeway. So that could mean that Brexit is on the cards. There's going to be something that's going to be on the cards soon, or whether they just come out and say we've got another issue, we're going to negotiate on this, and it falls apart again. But we'll see. I think it buoyed the FTSE on Friday night. That's about it, guys. Any questions there? Anyone's got a different opinion? Just have to see how it all plays out the next few days, and probably this week going into Chrissy. All right, what we'll do, just start putting up some stocks. We'll have a look at, there's not, in all honesty, the way I look at things and what I'm looking for, I'm not seeing a hell of a lot play out. There's not, we're not getting those setups that we would like to see. For me, it's more about, I would find that we'd be picking bottoms if we're trying to buy in this sort of market. I'm not getting there. I don't think we're anywhere near on a lot of the stocks, and a lot of the shares, even the ones that have been rallying. We're not really getting that confirmation that I want to see to start diving back into the market. We've now got 4 positions because this SLR just activated today. So we've got the 4 positions. Wesfarmers short, so that was a bit of a hedge, and we did have KGN short, which of course we got stopped at by about 3 cents before it headed south, which is a bit of a bummer. So we're right on that, but just again stopped, so a little bit too tight on that. So Wesfarmers going all right. We'll have to see if we can hang in that. It's 48 is the remaining stop. We saved us by 2 points, but if we can hold below that, I'd expect that to take out 47, or whether it's a bit stretched down here, we might be asking too much of it to continue down, and then we could, whether or not we just start looking at getting out, or we just hold it and see if we can break down through 47, and then it's on again. I think there could be a bit of a blowout on the downside, but like I said, this market is starting to see, on the ASX at least, opening down. It's clean out a few, your retail punters that are seeing what's happening in the US, getting nervous. They were out first thing on the open, pushing the market down to its lows, and then like Friday, it grinded back up again into the close to finish down 2 points, not 50 or so at one stage. And then today could be a very similar type of action. It was down 44 to 45 points at one stage. So we'll see if that can bounce into the close and we get something similar to Friday, which could drag in some more buying tomorrow. Molly, we're in at 22.5, which closed down there on Friday, and we've opened up at 23, touched on 24 today. There is still sort of that residual buyer in there. I don't think they're overly aggressive at the moment on Molly, purely because the overall market. I mean, you're not going to be jumping in, being too aggressive, trying to chase the market high when there's really no need. There's enough. There's not many buyers around in this at the moment. We've sort of been caught by a negative market, and it really is this longer term chart that's looking good. Potentially, it's just trade up to 25, and it could be just going sideways. It might just have to consolidate here before we get up again. Otherwise, we just get stopped out and so be it. But it's still, that daily's still on the rise with higher lows. It's just, up at these sort of 25.5, 26 markets, running out a bit of steam up here, but we'll see. That's the other one. So that's up. That's up. RBL, which is, look, in all honesty, it could be struggling a bit. We got to stop just, I think it's at 160. So if this can't get a bit of a move on soon, the weekly chart looks great. It's had that run up here. Good pullback, touched on that level of about 145 3 times or so, 140 a few times, popped up. This is your higher low. We should be rising here. Otherwise, I don't want to think that it's just going to contract again, or it's going to start to retest down towards that 150, or what's that low? 152. These lows are that higher low just in there. Otherwise, then we've got a lower high in play, and that could break that. And then it could have a decent enough corrective or correction on that. The weekly is looking good. It's just that move to the upside is just struggling a bit. But we'll keep an eye on that. That's why stops are the most important thing there, just to mitigate all your risk. And that's it. So that's SLR. Just in here at 60, 60 and a half. It's about where it is at the moment. And that's, I don't mind that weekly chart at all. We had press up, took out the highs, decent correction, high low here, and it's a good run up. That's going to drag in a few buyers and really perk anyone that's not in it, perk their interest. It's got a little minor low and high in here, had to pull back, and then started. We built a major high low just above 45. So in all, what we'd be looking at is this leg up from say 35 up to 65, 30 cent. Add that to 45, say, give or take 45 to 50. 30 cents to that should take us to 75, so which would be in line with these highs, which would be a nice little trade. But we'll see if that can continue on. All right, that's it. I mean, like I said, I don't know anyone else, but if you're finding some really handy setups, let me know. But at the moment, we're not seeing anything really seriously convincing. I sent out a note today on, was it Bank of Queensland? Yeah, BOQ, which I don't think is looking as negative as some of the bigger banks. And you can see on the monthly, it's had a pressed up here, good sell off here. You've got a lower high in here, come back down and retest the lows. So that's a good little base for me. That major correct support around $6. Pressed up, had a pullback to build your higher low, tried to go again, and then you've got obviously the negativity still hanging around. You've got your lower high in here at 13. We've retested this $10 mark. So what I'd ideally, dropping down the charts, looking for on Bank of Queensland is a hold above $10 and then see if we can sort of, even if it contracts a bit, I don't care what it does from here, but I'd like to see it hold above 10. I don't want to see this start to press lower and a test 10, push down through it. I only because the rest of the, just because the CBA, Westpac, they've all broken down some key support zones. Whether or not it's a big flush out on the major time frames like monthly or so, or whether there's sort of the start of a decent correction longer term, and it's going to take a lot of time to repair itself. That's why I prefer to just hold up above 10. I don't want to see it press down, retest down to here again, because that's the third time, and that means your lower highs are still in play. Lower highs are pressure in selling. If that sellers are still there, they're still hanging about, there's still a lot of selling to come in, then we'll just have to reassess it. But at the moment, really small volume today, which is not a bad sign, and it's holding on with a 0.5% gain at the moment. So I think out of the banks, this would be my favourite. If you go and take a look at ANZ, go into longer time frames, it took out these lows at 26. It is extended. It's getting extended here on the weekly. It doesn't mean that okay, because it's extended, it's going to hold up that zone. It has pressed through. So what we could do is find that it's a bit of buying comes in, hits 27, lower high, takes us straight down, and then we're on our way down to test 22. We don't know just yet. We've got to wait for that to play out. NAB, they're doing a similar type of thing. They have got a support zone around 24 to 25. They're not far off that at the moment. And we'll see if that's, if it can hold up around here. Again, it's getting sort of overextended on the weekly charts. Sellers are trying to get in there. Oh, they are pressing it lower, and it's taken out that low at 26. But again, that's looking more negative. CBA is very similar. They're all looking a lot more negative. CBA, that $70 mark was sort of the important one. We were talking about that as being a washout. Instead, that was just a lower high and it's pressed down through. So that's confirmation. It's really looking a bit weaker on CBA. In essence, you'll have to take it. I mean, the way I would view CBA, if anyone's got this one, take it from high to low. Say what's $95 down to about 70, $25. That moved down, found support here, pressed up, got a lower high at around say 87. Say take away 25, would we say $25 from that? Takes us somewhere around 60, just above 60, 62, 63. So we're at 67 now, so it could still have another $5 on the move down. And that's just guessing because there's really no support zones through here that it could bounce off. No major support. You've got a real minor one just in here, that low at 64.14. So if you're a buyer, or the bigger fundies or the bigger traders, they're going to be looking for areas where there could be some support there. It might get washed, washed out, but they'll be looking for those levels to buy into, to buy off. But at the moment, it just doesn't look like there's any around on CBA anyway. So that's my view on the banks. I think BOQ, I'm just going to keep an eye on that one. All right, let's just get into what we've got now. BGL. BGL. Well, it's probably a tough one to look at on the weekly. That's, yeah, it's kicking higher. News today, was it? What's happened here? So obviously some good resource upgrade. Million ounces of gold. That's a handy one, isn't it? I'd suggest, not that people know, was it out today? It was out today, 9/11. Someone here, at the start of the month, they were probably spruiking it, potential upgrade, and then you're getting buyers stepping in here. It comes out the upgrade, well, not the upgrade, but the resource news announcement, more than 1 million ounces of gold. Um, the market's popped up, so it'd be interesting to see now if there's a bit of profit taken in that, because now it's no longer the unknown. Good announcements popped out. It's been factored in for some reason previously, I'd say, start of October, unless there's been some other news which start of October. I'm saying outstanding high grade drill results. So I get some good. Okay, so it's been a bit of probably more of an accrual of good news. That was in September, so the end of September. So okay, there's been some good drill results. They've obviously managed to upgrade well, their gold resource. It's not too bad. There's really, there's nothing much to look at on this one because technically it's gone through all the levels. It's stretched at the moment. If you're not a buyer, I wouldn't suggest to buy because it's a big punt. And if you're going to do things properly, technically, where you're going to put your risk, for me, it'd have to be right down below 18 cents, from 40. Why would you do that, to be honest? Because if it's going to pull back there, it's something's wrong anyway. If you're going to get stopped out, and the fact is, if you have your stop, say at 30 cents, you could easily get chopped out on a pullback, and then it pops up again because it's really there's no key levels to work from if you're going to be a buyer. In saying that, if you are long, the way I'd attack this if I'm long, I'd just be hoping for that continuation. I'd be trying to run a tight stop, potentially at 30, even taking some off because it's had a run up. If you're in somewhere around 24, even 28, even at 30, it's 25%, is it? No, it's not. It's about 30% rally if you got in at 30 or thereabouts. So it's looking good. Like I said, if you were long, you'd probably be just holding off on this one and just waiting to see what happens because the fact it's reserve, some good news flow, you'd be looking at it thinking, okay, how much more news can keep supporting this? How many more buyers are willing to get in up here at stretch markets, at stretch levels? Sorry. So I'd rather just hold off and just watch it for now. But either way, if you're in, great work. BGL, BX, BXB. BXB, I'm just going to keep an eye on this one. I think what we were talking about, we'll have a bit of a rundown. Is anyone looking at BXB? Not that I like it as much. Got some bad taste in my mouth with this one, but still, for me, actually, I'll take a step back. Let me just take a step back. I'll go back to the weekly, and we can see that the markets, the weekly setup, and why we're liking it is purely because it's broken through a fairly key level. So we've had this, move up, pull back. This is all longer term. It's come down, and what we've done at that stage, it would stretch to. Don't forget, we've taken out that zone around 925, but then it's got to the lows. Say at 9, it touched on that, so you've got a lower high here, pressed down, touched on it, retested it, bounced again another little lower high, and it's got some lower highs in there. But you can see the way it's moved down here was just, geez, it was just a mess. It come down pretty hard here. Tried to bounce, gap down again, bang, straight down to that $9 zone. Pressed up. This move down was pretty steep. It's still quite some strong selling. Buyers started stepping in at 9. They let it wash out that zone, and then they started stepping in and started holding it. It's bounced back up, so it's gone from basically 9 up to 1025 or 1030 or 40 zone, which is pretty good. Now, the steepness of this move, and then we had a little pop up, whereas we really didn't here. You can probably say that is a little pop up, not too much. There's still, you can look at the wicks on those candles. There was still some heavy selling, thumping it down, led into bounce, thumping it down, whereas this is more of a correction, and you can see the way, just the price action, come thumping down again, I guess, just in the last move, the last sort of tail end of that move, thump down, big washout and rejection of that 9, then pretty much went straight up from there. But what you've done from there, we've broken all these key zones. Draw it a bit better than that. These key zones. Is everyone coming through okay? Just make sure I'm not thinking too much on my stream. Yep, going along okay. Ooh, sorry guys, just want to see if I'm still on. Five. Yep. All right. All good. Must have been my end. I got booted out from my own stream. It's not nice. Anyway, so you can see that this market, we've got a key level. It's broken through that 1050. And we've this here too. I don't mind this at all. Once it really rejects that low, it washes them out. That's just going to get some sellers, and you know that when you're getting lower highs into a zone, people are probably going to capitulate below there. There's going to be some stops that are held below there. Anyone that's just given up, they've tried to buy it here, it's come back down, or they tried to buy it here. They saw they weathered this storm, lower high, pressing down, still pressing down. It come thumping into that zone. They're probably going to have stops under there because they're just sick. They just want out. They don't want any piece of it anymore. They get cleaned out, and the market turns around and retraces straight on them. So there's also some people that would be watching that, getting stopped out and going, look, I'm getting back in, because for whatever reason, they might have a fundamental reason to get back in. They might have just been buying it back at 10. It's pushed up, and then it comes driving straight up through that, what was it, 1060 or 70 zone. So that's quite good price action. So we started looking at this, thinking, okay, if this is going to be more positive, if you're going to continue on, and this is going to be a good, healthy move that could potentially take us up towards the highs around 13 to 1350. I don't want to guess it. I'm not going to just guess it and just buy on and sit on the bid and buy. I want to see confirmation. And what I'd like to see, this is the move up that I'll be ideally looking for. One, pull back, and then you're looking for that secondary move up. It's got to, but it's either way. It's got to find a zone somewhere in around here, and you're not really going to get that from the weekly charts. You're gonna have to drop down to the dailies. Now, looking at the daily, the way I'm assessing this, and I wouldn't like to see it break through these lows at around 10:15 or so. But what I've got my eye on, so I'm looking for the zone from the weekly. I don't know where that's going to be. It could be, a test down to 10. You've got another sort of a zone through here at 1040. So potentially somewhere in around there. But what we've had is this one, a pullback of this daily leg up after that washout of 9. It's had a big move up. We've had one lower high, press down. So you've had the two moves. I'm always looking for that two moves, because the first sort of a pullback, people are going to dive in. Just the early traders, maybe a bit too aggressive, not much confirmation. They jump in, they get squeezed back out. And then on the secondary move down, people are going to be a little bit more tentative. So what you'd want to see from here is this low hold up, let's say at 1020. I want to see a pullback there, and I want to see it chop around. I don't mind if it chops around a bit here. And then I want to ideally see, that sort of a zone broken. And if it can pop up through 1060, then I'll be looking for that entry. Because then what you've got is the potential beginnings of that secondary leg up. Because you've got the one leg up, contraction, and then you're starting your second leg up. As soon as you break out of this, you're looking for it to break out of contraction, and that's what you're getting by a push up through that, sloping resistance line. Then you're anticipating from the weekly that secondary leg up. We've got first leg up from 9 to say 1150 or thereabouts, 1175. We're looking for another leg up. We just don't know where the start is. We're trying to assess where the start's going to be. So that's why we're looking down to the daily to see once we break out of this contraction, because the market's still contracting. If you just bought here, nothing to say we're completely wrong. It takes out 1020 and trades all the way back down to 9. So that's what you are trying to avoid by buying on the bid. So never buy on the bid, just because, if you're buying on the bid, it's this sounds bad, but it's an arrogant move in a way. It's arrogant to say that you know exactly where the bottom is. Now, if you do know where the bottom is, for one, you wouldn't be sitting in the stream here, you'd be loaded. But that's pretty much, to me, that's sort of what you're saying. Now, you want to be buying in a rising market. And if you're just going to sit here and say, look, I'm happy with buying at 1040, you're saying that the lows are in. We haven't broken out of contraction just yet. You're saying you know exactly where the low's in and where you're going to put your risk. If you don't run a risk, fair enough. You could be sitting on a loss for a long, long time. You never know. But yeah, to me, it's I find it a tad arrogant to say that just sit on the bid, fair value, whatever you call it, and then it's really, I think it's more of a 50-50 game. I'd rather be buying when I've got confirmation that, say this washout, for example, if you can see, we've got this move down here, a pop up, it took out the resistance zone, pulled back, and then started lifting again. And you've got a clear level to buy from, just in here. And you can see on that green candle. So we're not trying to anticipate the low. We're not trying to guess where the low is. All we're trying to work off is the correct price action. When you've got evidence that everyone else has started supporting it, it's a weight of numbers game. We're trying to find the perfect area where it's a weight of numbers in our favor, not against us. And we don't know that until we get a higher low. And if this is going to be where the higher low is, somewhere around 1040, great. If we start to lift here, okay, good. And then we know that there's a good chance that this is the start or it's a good zone and they're going to start, it's going to rise. We're going to buy it on the rise. And then we other people that are coming that wait for more confirmation that are a bit less aggressive. They want to know what's going to happen. They're waiting for more confirmation to be, um, I guess, what am I trying to be? Confirmed that they're right. They're on the right side of the market. Now, the way I just like to buy when it's on the rise, that first sort of confirmation, I'm happy, jump in. And that the way I'm assessing it, that could potentially be the second leg. It's going to take out the highs. We're going to work right up to 13. I want to be in as early as possible. If I'm right, great. If I'm not, okay, I'm not risking too much. Does that make sense there, guys? What I'm just blabbering on about there? But I think it's a good little one to look at on BXB. Just wait to see if anyone's got any questions and have a drink. All right. Hope it makes sense. Let's go to the next one. BXB, JBH. Yeah, I've got mine, this one too. Let's look at it. That's the weekly chart. You can see the monthly is fairly clear. We'll draw up the monthly, and this is, I guess, the importance of working off levels and then seeing confirmation. Because, if you're a technical analyst, say that you're looking for levels. You're looking for clear levels and then what's happening at that level. Is it getting defended? Is it ready to break? And you're looking for evidence to suggest whether you should buy or just hold off, or if you're long into a level, is it worth selling? Selling some, taking off, or just letting it go because this is looking really strong. It's going to blast through a level. Um, if, for example, on this one, if you're long on this and it's coming into a level, you've really got to keep your eye on what's happening and what sort of price action is happening around that level to see if you're not the only one thinking that it's a good buy. Or whether it's just going to break through that. And then if you've got a wider stop, you might look at it and go, oh, look, I'll tighten up my stop because I don't want to risk too much on it. It's not looking good. You can assess it as you go. That's why I think key levels are kind of very important. And you can see on the daily, this is the monthly, the market's definitely on the rise and you've got a key level building around that 22 mark. I mean, we're still a while off that at the moment, but it's looking as though if we get a push up through this high at around, was it 26.50? Say if we hit 26.50, it's only $1.50 away or so. That's confirmation this level's holding up, and you probably want to be a bull. You're probably looking for, obviously down to your lower time frames, whether you trade from a weekly or daily, to be getting into this because that's confirmation that you've got your high low, especially if it holds up around 24. If we don't see a push below 24, we're fine. This green candle keeps playing out, starts to rally, the next month or so, we get this push up through, was it 26.50? Great. That's confirmation. You've got three tests of this low at 22. You've got the market. We're looking for that zone to continue that trend up. We've had a push up, pull back, all these pullbacks, testing a level, pop up, retest the highs, pull back, higher low, higher low, higher low. Okay, up here, got ahead of itself, up at 30. We've had this major sort of consolidation, but it's consolidation. It pulled back, popped up lower high, then come back down and retested that 22. So everything's starting to stack up where that 22 is going to be the line in the sand. Now, if that breaks, then who knows what's going to happen from there. You might have to start that process over again and start to find a level, find some buys, retest it, build, get a higher low. But at the moment, where we're standing just off this monthly chart, we've got a potential zone where it's going to be a higher low at 24. We just have to assess it. So dropping it down to the weekly, that's just here, right here. And it's a lot more clearer off that weekly. bigger chart there. Draw that up again. All right, I like blue. There we are. So that's your 22 mark. You've got a little zone through here. You see it's pressed down. That's your lower high in here. Press down. Sort of two legs move from that high to low, then lower high all the way down. Not really a level at that stage. It really wasn't a level. You could probably say that it's just an inside level. We call that an inside level. Inside high low on the way up. It's just found some buyers there. Okay, buyers were happy to defend that level. Touched it again. It's pushed up all the way back down, retested that zone and rejected it. And then up she goes again. It takes out the high. You can see it just takes out that lower high at around 27, which is, okay, at that stage, what you'd be looking for from here, if you're wanting to buy it off the weekly charts, you'd be wanting to see something like this, at a higher level, and then get your level, bang, you're in off the weekly. That's your high low on your weekly. You've got that sort of contraction that's happened, and then buyers start winning out again, press it higher, then you'll be looking through those highs. Instead of come all the way back down. So we'll just delete all that. There we go. Comes all the way back down and retest it. So that's not a problem. It's a good sign that there was some buyers willing to take it off 22 and lift it. That's fine. What you've got then is the market's pressed back down to 22, and then it started to lift again, and it's a good sign. So the more it tests the level and it finds support and it holds, the more probably people have been watching it from the sidelines that might start to get enthusiastic about it. But I'm not saying everyone trades like I do, but if you're trading in a similar style, you're looking for the higher low to work for, because the higher low and the bigger, I guess, badder the higher low is, like potentially we could be seeing here, then, especially around 24, if they can hold up, that's a better sign, because then at least you've got a trade. And if it doesn't crack through the highs at 30, it doesn't matter, because you're still going to be up on that trade. So if this is what I'd be looking for here, just from that weekly, we're getting a bit of a curl up on the stochastics in it, not a bad zone. So that pressure is it's find some buying, pressed it up into overbought with this move up to say 2650. It's corrected off that 2650, but this major zone, it's a major zone at 22. It's held up quite nicely. So you're looking for that higher low, where potentially it is a zone, in a nice little zone, which we'll go down to the daily in a second, that we might find some buyers, and they're going to hold that higher low at 24, and they're going to build that higher low just by glancing at that weekly. So if that's the case, and we do get our entry somewhere around 25, the way I'd assess it is that from that low to high, I'm just doing a different color here, yellow. So that low to high, if that's going to be the low, take it out to the high. It's going to take us somewhere up towards 29, which if you get it from 25, for instance, that's a $4 rally, and you've got risk of say $1. Fine, that's a 4 to 1, isn't it? My maths is correct. Say 3.5 to 1. And that's a great little trade, even if the weekly doesn't break through those highs. But that's the way I'd be looking at that. Even if it is range trading between say 30 and 22, it doesn't matter. There's still a trade there. And if you break it down to the dailies, we're trying to look at this leg here. Is that going to hold? Look, it looks like it's very close. It's very close. That 24 could be holding up. I don't like a big green candle. I don't like to buy, just on a push through here. I could get flushed in, stopped in, and have my stop around 24 and get flushed out on a retest. I'd rather see something, a bit of chopping and a bit of contraction, only on a small scale, say between 24.5, 25, bit of contraction, and then potentially if that's going to lift. And again, I'd just like to see this is ideally what I'd be looking for. You've got your high up here. That's pretty much a retest of that high. So 2650. The market's pressed down here. I'd rather see it pop up, pull back, and then buy in a pullback once it's got through that 25 zone. Even I don't mind if it's ahead of 25, 26.5, because this is the legs that I'm looking for. That press up to 29. Does that make sense, Larry? But I think if it's looking to me like it's borderline going to hold 24 as a major high low off the weekly. A major high low has got more emphasis to the upside. It's going to drag in more buyers from a weekly chart. And if you can get a good little entry off the daily, that's all you really ask for, ain't it? If you're completely wrong and it touches 26.5 and starts to find weakness, and you extend it on the daily and you get extended on the weekly, it just won't go through it. You could probably take it off for a small gain. Doesn't matter. All right, hope that makes sense. JB, let's go to VOC. I did look at that today, Paul. I had a bit of a chuckle. Look at that. I have to get Paul onto the stream soon. So yeah, it's looking a lot better. So I'd be, if I was looking to get into this, I'd just be looking for that weekly. I'll see a bit of a weekly pullback, build my high low on the weekly, and then go. You obviously drop down to your daily. I could be leaving a lot on the table. I could go without me, but I sort of got my rules and my plan and my style that I like. I didn't quite fit, although I was debating a punch through that high, buying it say somewhere around 320 to 330, and having my risk below $3. I was debating that, but it's just the weekly chart being stretched up here. Now we're pressed into sort of that stretch zone where we are at the moment. I thought, look, let's just leave it. Can't go wrong when you leave it, but you can kick yourself a few times. There's always going to be trades like that. So that's a cracker. I hope you're still holding on to it, Paul. You didn't get out because you were in somewhere around 50, 250, 240, 50, wasn't it? 55? Live on the edge. Not me. I'm too risk adverse. The more time you spend in trading, the more risk adverse you get. All right. Um, See, that's good. That could, I mean, in all honesty, that could just go. I mean, you could be seeing this having a big run. I think your next level to be looking for is how it reacts up at around, say, 375. What are we now? It's only about 10 or 15 cents or 20 cents off that. So it'd be interesting to see if it can blast up through here and just keep dragging in there. This is going to look strong. And sooner or later, you're going to get a whole lot of people that liked it through here and got caught through here and potentially got squeezed out. They might still like it, and it spent the good thing about this on the weekly, it spent pretty much, what would you say, a year to year and a half of just holding that low and building that base, really cleaning out the last of the sellers that want to get out and starting to build that base, dragging in some potential new buys, some fresh buys um, for that leg up. So it has spent a lot of time. So the good thing is because it spent that time, then it could just go on without me. This thing could just keep trickling higher. And, the market could do this. So it's overbought here. It could just keep chopping around and overbought and just keep dragging up, dragging higher. If we get a weekly pullback, say something like this or like this, it could be a nice little setup on the daily. You just, okay, it's going up on the weekly. We're going to pull back on the weekly. It just looks like purely a pullback. We'll go down to the daily. We're starting to get a high low on the daily. Okay, in we go. Yeah, look, I might do if we get that sort of style from the weekly, because in essence, what we're looking at in the daily, okay, this was probably getting a bit stretched. It's based, my looking at it is based more around the weekly. If we get, let's draw it now. Didn't want that, but I'll go again. So I think, this big leg, we spent, like I said, from about here, I'll say about here, spent the time just sort of finding that base, consolidating, holding the base. You can see that the lows were pressing in. It was getting absorbed. Any of that last ditch selling, pressed down here, got absorbed here, held here, lifted up, lower high, still a bit of selling. Powered down here, got absorbed. Any sort of final selling was really getting absorbed around that 2 to 225 mark. And then it started to lift. So what we're looking at now is, okay, maybe all that selling is absorbed, potentially finished. We know that there's potentially no more selling. So what we're looking for is that renewed buying, is that lift in buying, is that more pressure on the buyers starting to stack up. Say we've got 100 buyers here that are running out of steam. We might get a bit of a pullback. Do you get another 100 jump in? Do you get another? I'm just pulling figures out, but you know what I'm saying. If people have been watching it, and the only people want to buy it off that low, people like Paul, buying off that low, they've been used up. That energy or that fuel has been used up for the push to where it is at the moment. Then what we'll have to do is have a bit of a pullback. But is that pullback going to be met with some more fresh buying? And that's what I'm going to be looking for. And I'm going to be looking for that from the weekly charts. So we've got this pop up here, support here. So now technically we've broken up. We've got the MA starting to cross up. It's going to get a time. So we've gone up through that resistance. We're going to get a time where it's going to get a bit extended on a weekly. If I'm wrong, it keeps going. So be it. Don't care. But if we do get that little pullback, and then we start to get it chop around here on the daily, and I'll be looking for that to be a high low on the weekly, and then looking for my entry off the daily, and then yeah, definitely alert it. That's if we can come back down. Yeah, we might get to 375 back off, retest the breakout zone around 325, and then look to go from there. So we'll keep an eye on it. All right, so that's that. What else? We got another one, SBM. SBM. Oh, it'll say the Barbara. Let's use their name. I want to see it do some more work, and I'll show you why. It's mainly the weekly, the weekly that I'm just got my eye on here. I know it's lifted, but who's to say that this is just not going to be a lower high? And we're looking at this. Well, that was a very small little arrow. This zone in here. We don't know what this is going to be. Whether this is the low or this is the high. It's going to roll over and test, straight through that low. Oh, it's going to hold up, chop around. Or this is just going to keep going. But either way, this is sort of where I've got my eye on, and I think I want confirmation. I can't buy when the market's up here, because just because that's come down and that's like a V-shaped recovery. I wouldn't like to buy off a V-shaped recovery, just thinking just purely because it's touched on that low. Okay, this is it, and then boom, we can end up just rolling over. If I buy up here, for instance, we could just roll over. That could be a lower high for whatever reason. Bad news comes out, people get sick of it. Anyone that's bought it in here is coming under pressure. They're going to book some gains. The market capitulates. You don't know what's going to happen. So that could just drive through the lows, and then you're completely wrong. What I would like to see, just say this is what we're looking at. Okay, let's take that back a step. So what we've done, we've come off the highs. We found that 350, sort of rising support. We've pushed up to about here. What I'd be looking for, and it's the faster it moves down. I mean, you got to remember the speed that something moves down is never a good sign. If it moves down in the more like this, the speed that moved down compared to this, that's okay. That's showing that buyers are absorbing it. Whereas this, there's a lot more selling pressure. There's a lot less buyers willing to absorb it. So that's what you've got to look at. So when I see stuff like this where it comes down quite hard and fast, yeah, I know it's held up at that 325. Doesn't really mean anything. I want to see a bit more time go where it could come down and retest, and then you start showing signs that it's actually going to be supported down here. All right, and that's going to take a bit of time to play out off some higher lows, and then potentially I'm going to get to a point where, okay, yeah, the weekly is looking good. It's holding a higher low. It's held a couple of little inside higher lows. By inside, I mean inside the most recent high like that. If it holds those, then yeah, it's just showing you that, okay, this selling pressure has been absorbed. Any more selling, because that's one move down, your first bounce, there could be a lot more selling pressure to come. You don't know. So if this starts to roll over from here, and then you start getting the buyers stepping in at 350 to 75, then yeah, then I'd be a lot more confident that they're willing to soak up, and there's probably a lot more buyers on the sidelines that you don't know, you don't see, you don't hear about, that are willing to absorb and build a big position. And if that plays out, like I said, over a bit of time, not just your market's pressed down, it's popped up, we come down and boom, and expect to buy on a break that way. I don't want to see that. I want to see a bit more contraction in price, because I still think this selling was pretty heavy. I want to see, and I want evidence that that selling's finished. All right. So I'd like to see a few things like this before, okay, then you get the breakup, and then you've got your buy zone, and away you go. I hope that makes sense, guys, anyway. All right, but either way, I think the longer term trend is up on this. Let's just see what the daily looks like. Could have been talking rubbish there for a sec. Yeah, look, buying through 410 was probably a bit tough, because you got a little. I'd have my level here at 380 if I bought it, say 410 for instance, and that little breakup. I'd have my risk just below 380, because if you're right, it doesn't matter. If you're wrong, you don't want to risk too much on it. If it comes back down and retests down to 350, 40, 30, you don't know. So if that's the case and it holds up here, you get stopped out at a small loss. Doesn't matter. It's part of it's part of the game, isn't it? All right. So that's probably about it. We got through everything, I think, didn't we? All right, guys. We might. Is there anything else you want to quickly look at? Otherwise, we'll just call it a day here. Short and sweet. We'll see if this market's gone back down again. So we're heading heading south. Let's just see the overall intraday action. Look, I could find some support around 59. We'll just have to see if they can hold up. But this action's a bit different to what we saw on Friday, so just be wary. And if you go back to the 30-minute, we could be seeing the makings of a lower high on the weekly, on the 30-minute chart, which would mean that you've got a good resistance zone around 59.50. Markets open, we've been bought up to that zone, open lower. The second time around, it's not getting bought up as strong, and that's probably that 5-minute. That's that chop you don't really want to see if you're a bull. Yeah, so we'll have to see how it finishes off today. But we could be in for, just looking at that 30-minute chart, we could be in for this to be a lower high. We may have just seen the lows, sorry, well, a lower high put in place today. It's got to be, when we've got to keep an eye on it. But that high, what's that high there? High 59.18. If that's going to be a lower high there, I don't want to see too many failures to continue on up. But could be completely wrong. This thing could just edge up, spike up to, tonight the US rallies 300, 400 points. We get dragged up, take out 59, was it 50 zone, and up she goes. Then we have to just reassess it as we go. But we'll see. Mesoblast. What do we got on Mesoblast? Been looking at this intraday. Well, it looks like rubbish at the moment. Yep, we're reassessing. And that was pretty much after Friday's action, which is not bad. I mean, what that's done is anyone that's sort of buying a bit early, probably pre any serious confirmation, there's been no confirmation. This is the daily chart. No confirmation for me to buy. It was potentially going to be on a rally through that high at 211. And what do we get to? 209. 209 again. What's that? So this is today, Friday, Thursday, Wednesday. Tuesday, Wednesday, it got to 209. So it failed to break through 211. And that would have been potentially, buying a breakthrough 211, looking towards, you're going to come up to quite a few resistance zone, maybe 220 might be the first. If it gets through that, then you're looking up towards the highs. So for now, it's reassessing, and I want to see that high-low build. Always wanting to see that high-low. But off the weekly chart, it's not too bad. We might be just pressing down, cleaning out a few of those early buyers at this stage. Early buyers that probably bought in here, clean them out, start to lift, build your high low, and then go. Again, I just want to see a bit more time. It's always good when you see this choppy price action, but as time goes by, it just gives you a bit more confidence that you're going to be on the right side of the market when it starts to lift or you get that higher low. All right, but yeah, we'll see. Definitely reassessing this one. But just keep an eye on it, keep it on the radar there, and keep letting me know. I'm looking at this one anyway. But yeah, just bring it up again on Thursday, I guess. All right, guys, we'll finish up there. Thank you very much for joining me. Have a great couple of days, and remember just to be safe with the trading. Don't take too much risk on at the moment. And like we always say, trade what you see, not what you want to see, not what you're guessing, not what you're sort of preempting. Always trade what you see. If you're late into it and you have to give up a bit, so be it. I'd rather give up a little bit to be safer or get more confirmation than jump in and just trying to guess. All right, guys, thanks very much. We'll speak to you again on Thursday. Cheers. Bye.